In the previous section, we looked at why we need a general journal. Let's now look at the format. Because it tends to record the less regular transactions of the business that don't belong in the special journals, it doesn't have any special columns. So because there's potentially a wide range of things that could go in the general journal, we're just going to keep it very simple. So we'll have a date column, have a details column, that's the name of the ledger accounts which are affected by the transaction. We've got then a debit and a credit column for the general ledger. So we're actually going to do our debits and credits as we enter the transaction rather than when we post it like we did with the special journals. And then we also have the debits and credits for any subsidiary ledgers for debtors and creditors that might be affected. So looking at an example, the owner withdrew $1,000 of stock for personal use to give to as a birthday present to a friend. Memo 1 was written by the owner to provide evidence of this transaction. So we'll look at why these accounts are affected in a later video, but in this case we'd have a debit to drawings and a credit to stock. We'd also need to do what's called a narration in the general journal, and what we do there is we give a description of the transaction. So in this case, owner withdrew stock for personal use, and most importantly we put the name of the document or the number of the document, which in this case is Memo 1. We now post each transaction individually to the general ledger. We don't total them up or anything like we would in the special journals. We just post that debit there to drawings and take the credit there to stock. Looking at the dates in the journal, we always enter transactions on the actual day, but in the general ledger for drawings and stock, we always post on the last day of the period. Another one, a debtor was declared bankrupt. J. Smith owed us $500. Memo 2 was used to record a bad debt expense. So again, we'll look at why these accounts are debits and credits later on, but for now what we'd have there on the 21st of March is a bad debt expense, which is a debit in the general ledger, a credit in debtor's control in the general ledger, and then we'll need to go to debtor J. Smith's account in the subsidiary ledger like so. Do a narration where we've described it, debtor J. Smith declared bankrupt, and we've written the memo number. Posting that, we're going to need to do some entries in the general ledger on the left and also the subsidiary ledger on the right. So in the general ledger, we've got a debit to bad debts and a credit to debtor's control. And in the subsidiary ledger, we just have a credit to the debtor account for J. Smith. Looking at the dates, in the general journal, always the actual date, just like in the subsidiary ledger. You can see in J. Smith's ledger there, it's on the 21st. But in the general ledger, we always enter transactions on the last day of the period.